Hey Alpha fam, welcome back to another episode of Alpha Commission. I'm just gonna jump straight to the chase in this episode. A couple weeks ago, I was warning you about this upcoming, fib channel, which we were just looking for. Almost, I think it was back here, but I drew this line and mentioned that this was going to be kind of a resistance area that we should be looking at. And of course, there may be a number of reasons for that. There was also a horizontal fib, but the thing that was really interesting was that there was a diagonal fib. And these diagonal fibs don't come up that often, but when they do, you can see just how powerful this is, right? This has been an extremely powerful zone of rejection, and we have just been rejected time after time after time after time after time after time. Couple fake outs, rejected again. So I'm not sure exactly what to make about this. If this is going to end up in resulting in a capitulation, if we're just going to be sent back down. But I did get a warning signal approximately here, and I'm not sure what that would mean exactly because these signals haven't really been the best. But just something to pay attention to. The big concern, as I've showed you in yesterday's episode and other episodes, is that whenever we have this type of a structure popping up, we do see a 20% pullback, 20% pullback, 20% pullback, 20% pullback, 25 actually, 25% pullback, 25% pullback, 20% pullback. And what we're really hoping doesn't happen here is another 20% pullback. Could we perhaps find support in this area? It looks like we are finding support there. Right now we haven't violated any of these, lines, which I mentioned are really critical for us to be holding. Basically, the previous lows. We just don't want to break this structure. If we break this structure, it's going to start looking ugly. There's going to be a high risk of us just capitulating down into this region, perhaps finding support down here. Perhaps this 44K will end up holding. If we do end up breaking down, maybe we could have a long, off of this area. But if you look at these past structures, it really hasn't been something that you would want to bet on necessarily. Once you really start that full capitulation down, there's nothing that stops it until it carries out, the 20% move. And I've been seeing a couple different YouTubers talking about this 20% move. I know that for example, Crown has been talking about the 40% move that might be coming up. And of course, we might be looking out for that, whether it's up or down. But even he has started to talk about these 20% moves, and I've started to see a couple other YouTubers starting to finally talk about this 20% move that could be coming up. Of course, it is possible that we get squeezed to the upside, and that would bring us to the mid 50,000s. But it's just something that I've wanted to keep on your radar for several weeks. In fact, I might have even been talking about it for months just to prepare you for these type of moves. And since we are in an uptrend, I don't know if that's going to squeeze bullishly. And, of course, we are attempting to break through this area. But you can see we've done that before, right? Where the second peak on these kind of double peaks, they end up poking up a little bit higher than you would expect, and it's almost a fake out before they end up capitulating. So just stay on high alert. There's no reason to necessarily change your game plan. We are respecting the levels that we need to respect in order to stay bullish. We haven't broken down yet. And, we are making even bounces off of these small regions. But the question is, do we get locked into this kind of lower high structure here on the really local level? And if we end up breaking down, or do we end up recapturing this diagonal on the positive side and then use it to take off? On the weekly, we do see that if we have our EMAs on here, we do see that we are above the weekly 10, right? So it's not necessarily something. Pardon me. We are above the weekly 20. And so it's not necessarily something to be worried about. We're kind of bullishly retracing off of the from this weekly pump off of the 20, and as long as we stay above that, historically we haven't been too bad off, right? Like we're just on top of it, and we just keep running. And so really, what you're going to want to look for is whether or not these recross in a negative way, the red one and the yellow one, if we start getting some type of bearish crosses on it. And if we do, then we might be going back down. Of course, that could be a delayed indicator. And ideally, we want to see us like start curving up here, as soon as possible. We don't want this to round out into a negative curve. We don't want this to round out to a negative curve. We want both of these to, continue to round upward, right? Sort of like what they did here, right? They started to get that kind of rounding to them, but they just kept on going, right? And to be honest, on the weekly, we already see, that we've just held this negative cross. We actually never formed a positive cross, now that I'm looking at it. And so ideally, we want this red line, the weekly 10, to come on top of the weekly 20. And so, yeah, that's interesting. I mean, this should continue up. If this continues up, then, we're on solid ground. But if this just continues to round over, it's going to just continue this negative cross that we've had, and we can easily pop down. So what would that be? I mean, honestly, it's that 44,500 area, right? I mean, maybe you can give it a little extra room, just say 44,000. But we really don't want to violate 44,000. And if we do, then, we're just talking about, possibly a total breakdown. I'm not sure what I was going to show you on this chart, but yeah, we are just in this area. We are making this kind of like rectangular, this kind of rectangular area of consolidation. And hopefully we can use it as a launch pad to the upside. You can see just how clearly we had a fake out here, right? A fake out to the upside. And now we've come back down, test the bottom. And are we going to break back up, or are we going to break down from this wedge? Well, we have a little bit of distance, if we do fake out to the downside now that we faked out to the upside. And perhaps, we could even start to adjust these lines just because, it's been, Bitcoin has basically been violating them. And so if we are in a kind of wedge, then maybe we can think about it a little bit differently. But mostly we're in this rectangle of consolidation between 46,750, let's say, and 45,000, which I've pointed out before. And we really want to get back up into this area. We really, really want to get above, 46,750 and just hold that area and hopefully continue onward. We want this to be a low. We don't want it to be part of a high and then make a low under it. Like we really don't want that. Okay, we start breaking all sorts of structures. We start turning our EMAs around. Just there's a catalyst effect that just can, it can just tip things over very quickly, and you don't want that to happen. So keep close attention to these numbers. They're not arbitrary, although things like wedges and rectangles are arbitrary, right? These supports are not arbitrary. The resistance that we're hitting at a diagonal is not arbitrary, and you can see it's kind of ranging, but more or less it's right here, right? And if we come back up and we hit again lower and get rejected, and a lower and get rejected, I mean, eventually we are going to just tip over. And markets did take a hit today. You can see on the volatility index, this is something that I've been showing you, quite a bit. On the volatility index, we are meeting resistance at this line, which I suggested that we would, just like I suggested we would meet it in this area, right? That's why I had that region marked off. And for those of you not familiar, above this orange line is really bad. Between the orange line and this teal line, this is kind of like neutral but not great territory. And below, I mean, in this teal area is extremely good for stocks. It means low volatility. It means that stocks can survive very well, right? Because there's low volatility. So it's just easy for businesses to plan, what their earnings can be, that sort of thing. And while you're in that area, the stock market is pretty healthy. While you're above it, it gets progressively worse. When you're up here, it's just very bad. It's too risky. People pull out of the market. And so people were definitely getting out of the market when we were in these areas, and then we suddenly came down, and this is when Bitcoin was flying. And my last update was here. I was suggesting we would get into the neutral, into this really great area. It's kind of like heaven for trading. And we've been in there, but we ended up turning back once and twice, right? And you can almost see that effect like directly on Bitcoin. Once and kind of twice. We're getting kind of some shock on Bitcoin, right? Like Bitcoin's not sure which way it wants to go right now. This is almost like the inversion of what we're seeing on Bitcoin's chart, except there's a lot more logic to this because this is more pertaining to stocks than it is to Bitcoin, and then the stock movement controls how Bitcoin moves. But and that's not even 100%. So this is kind of like 2 steps away, but this is the precursor to that. And so what we want to see is the VIX get even lower into this low volatility region, although it is in a pretty healthy place. What we don't want to see is it rejected off of the surface and come back up, because that can happen. You can see like right here, like rejected off the surface, comes back up, right? Rejected off the surface, comes back up. It's just that markets can decide that the conditions in the world are just too volatile, and it can come right back up, right? It can come right back up. And this is the example I was showing you, like right here, where you have all of this nice trading area, and then something crazy happens in the world, right? You get into these scary territories, you come back, but this wasn't resolved yet. Whatever caused this scariness wasn't resolved yet, and so you just kind of skim off the top as the markets become kind of accustomed to the new chaos in the markets. And then the chaos just returns because it wasn't resolved yet. And it can potentially get even worse. All right, and so this was obviously COVID, and markets have just been healing from COVID ever since. And this, of course, is Russia. And so is something weird going to happen that makes us like skim off the top? Because we're just not fully submerged yet into these heavenly waters, right? And we've just come straight from hell. We got kind of used to hell. We got normalized to hell, right? The hellish conditions of the market, we've gotten normalized to it. But you can understand, like we're not like safely in here yet. We can still be rejected and come back up, and you can see how volatility moves, right? It's by no means stable. Like volatility itself is volatile. It's not stable. And so what would you really expect after putting in a little consolidation like this? You would honestly expect a pump up, which would be scary for the market. It would be not good for the market. Okay, like this has just been coming down too long without a spike up. Like there's going to be a spike up. And best case situation, like we're seeing something like this where we could have a little bit of a double dip, right? You see this? Let me turn that white so you can see it better. Turn off my EMAs. And then you get a second consolidation. And then the fires start, right? And so maybe we're doing something like this. Get a little double dip, right? Maybe a little push up. And then maybe the fires start again, right? Whether we go up here or we just stay down here, nobody knows. It's up to Russia, Ukraine, the Fed, all these guys. And maybe that could be in May, right? Maybe that could be in May. If not right now. Because this could potentially have been our first dip and this could be our double dip. See what I'm saying? Like we could just have problems right now. And I don't know if this is psychological or if it's mathematical, but you can see that this has a very regular structure to it. It's not something that's not predictable. It's very regular. You can get a little bit of an extension, and we seem to be having that little bit of extension, but that extension doesn't last very long. Almost all of these have regular intervals. And so we're kind of overdue. We're kind of overdue. And I hope that makes sense because this is like fire, right? And this is way too calm. This is way too calm. You just don't see that on this chart. Just don't see that calm. Even here you had like fires, right? Even here you had fires. So something's weird here. This is not normal behavior for the volatility index of the stock market. And you can just imagine that there's going to be some fire, you know, pretty soon. So understand your positions, take your risk management, make of this whatever you will. But I think it's important to be aware of it because the volatility index does not just move straight down. The volatility index is literally on fire, all the time. It's volatility. And so today we did see, some issues with the stock market. I think a lot of people are making kind of a big deal over it. I'm not sure why necessarily. You know, we just got a little bit of a pullback. I wouldn't even call it a rejection. Like, this is still just a pullback to me. I guess you could call it a lower high structure, right? Where maybe, this was your high, and then you have a lower high, and then, I don't know what the expectation is that we would come back down here. But as far as I can see, like, we're not in danger yet. Like, we're not in danger. I think a lot of people are making too much out of this pullback. Um, you can see this is kind of the structure that we have on Bitcoin right now, right? You see that? Just pay attention to this. Like wicking down here, we have this bottom we don't want to break. Like we want, you know, we want the S&P to kind of do like this, right? Hopefully, something like that. And if it doesn't, and it could do something like this. You can see here, right? Pull back, but it goes back up, and then, yeah, it can dip later, but it still goes up, right? And so, of course, there's going to be pullbacks, right? Nothing goes up in a straight line. There's always pullbacks. It's always sloppy. And so the question is, are we now in one of those regions where we're going to get a big pullback pretty soon? Are we going to do something like this? Even if we stay bullish? Or is this just a lower high, already coming off of a high? And so we have like a bigger lower high. And are we just going to, start to capitulate down? And this was just all a fake out. That's what the markets are worried about right now. The Federal Reserve came out with a statement. Um, they said that they are looking forward, at every meeting. Uh, to calibrate the appropriate pace of firming the policy to reflect incoming data in terms of how they want to adjust interest rates. So they're not giving us any stability right now. They're just saying that they're going to increase interest rates. This was today. And they redoubled their intention to perhaps have a higher interest rate, right? Perhaps have a higher interest rate than what the market was expecting for May. So they're kind of building in the expectation that there could be a double interest rate hike in May. And of course, they had the 25 basis points increase, but maybe they're going to do a 50 basis points increase next month. And so this is going to suppress the market a little bit. Like the markets don't like to hear that, right? They don't like to hear that. They were hoping for just another 25 basis points. 50 basis points is pretty heavy-handed. And so that could have the market pulling back. That could, if they do too heavy, that could cause, some type of chaos in the markets. And we don't know exactly how much they're going to increase it by. But, they want to target a 2%, rate. And so they are going to be moving interest rates up. They are going to be moving interest rates up. And probably a little bit faster than some people in the market expected. Because this market was basically used to having like almost zero interest rates pretty much, right? And so a lot of the market was they didn't even believe that the Federal Reserve would even increase rates even by 25 basis points. The reason why this is important is because interest rates affect how how much it costs to basically get money. And if you can get money for basically free, you can put it into risky assets such as Bitcoin. And if you can't get, cheap money for free, right? For basically free, then you're not going to put it in super risky assets like Bitcoin. And so the more free money there is, the more inflation there is, but also the more investment into stocks and to risky assets like Bitcoin. And so as the Federal Reserve increases interest rates to fight inflation, because that tightens the monetary supply, right? There's less money out there if there's less free money being given out. And if it's more expensive to take free money, then it's not free money anymore. It's just kind of expensive money. Then money is more valuable. So if money is more valuable, then you've fought inflation, right? And that's what the Fed wants to do. It wants to return value to money because there's just been way too much free money since, Bush, since Obama, and since Trump. I mean, all those presidents just had like free money, policies. And of course, Biden started off that way, with the same policy as the last three presidents. But, he's saying like, we got to get inflation under control, or at least his Federal Reserve is. And so they're starting to do that. Okay. So finally, within 4 presidents, we finally have one that's actually fighting inflation for a change. Okay. And that's good for most people, but it does impact investors. And of course, we couldn't just expect that free money was gonna, continue forever. Nothing is for free. You always have to pay for it down the line, right? And it can't be at the cost of bread and milk at the grocery store, okay? Like if people can't afford bread and milk, I mean, you're gonna have revolts in the streets. So, guys, basically just watch the stock market. If we do have a lower high here, in stocks, then potentially Bitcoin's coming down also. If we're able to just hold the support, then potentially, Bitcoin's going to be able to hold support also. And watch the VIX. If the VIX is on fire, that's a bad thing. You don't want the VIX going up. You want the VIX going down. And, we want to be into this sub 20 area, which I've been pointing out to you guys for months. I hope you enjoyed that. I hope that gave you some perspective on what's going on in the market that maybe you didn't have before. I know a lot of people don't explain these things. They just kind of say like stocks are doing good, stocks are doing bad. Just kind of leave you to guess what these things mean. But and I hope you appreciate, just going over some of the past behavior of Bitcoin as opposed to me just, BSing and saying I know if it's going to go up or down. I don't know if it's going to go up or down. Nobody knows if it's going to go up or down. But we can set, certain levels of validation and invalidation. And what we really want to do is recapture on top of this diagonal because this diagonal has been like the bane of our existence for the last couple weeks here. Rejected, 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 hard rejection. Rejected, rejected, Attempted to, smacked down. Attempted to, smacked down. We are just getting rejected in this area, right? And I think I carved out this area back here, right? And you can see it still being respected now. And this area right here, and this is just the area that I wanted to hold. And we definitely don't want to break down to this 44, but that's kind of like our last hope. If we break down below 44, I'm probably just going to get out of the market because I'd expect that we'd come back down lower. All right, just like these things. Maybe pull one of these and then maybe even continue down where this was just a blip on the chart. However, if we do hold this area, I may consider just to get back in on the rebound because again, we could have, this, although a lot of very professional experienced traders are saying like if we have this breakdown, probably we're going lower. Just I don't have that sense of the market necessarily right now. I do think we still are more likely to test the top of the range in these 50s. And there's, there is kind of a support that we are using here. It's not that beautiful, but there is something here, and that would actually align with the bottom of it, right? So if we did break down that 20%, it would just bring us back onto this channel, which may just be a slower rise than what we had, wanted. Of course, we'll have a lot of work to do, and our EMAs will be messed up, and it's going to be shaky, and then May could actually end up dumping us down. But not sure, right? You have to take it one day at a time. And, BTC dominance still going down. ETH dominance having some type of a retrace. Kind of suggested it might, but I still think it's going to take off. People getting a little bit back into Tether on this. I had this line drawn out a long time ago, testing the underbelly of it, but potentially we still break down. And then I had this dotted line of support. You can see we used it as support here. We got rejected from it here. We got rejected from it here. Bounced off of it here. And so are we going to turn around? Or are we going to continue to break down? Well, this was also a line of resistance. Resistance, resistance, right? And so possibly, we just continue on our way down. And if Tether continues down, then that's good for the market. Maybe we still have a bit of a run in us. This was the major line where we actually turn around, right? Broke down to here, turned around, used this area as support again, and then broke down again, right? You can see a lot of interaction right here, right, along this green line. And then a lot of interaction along this blue line right here, either breaking down or breaking up, right? Breaking down. Oops. It's not beautiful, but it works. There does seem to be this kind of weird, expanding, wave function, going on. And I think it's just because of how much money is in this market. So, and maybe how informed they are, like everyone is, like we're all like sharing information these days, compared to back here when it was kind of every man for himself. And then in 2020, like people started to get it together, and now we're all, very aligned, right? And so we kind of have an increased confidence base. But when we panic, we you know, kind of know when to get out, get into Tether, get into money rather than Bitcoin. Of course, USDT dominance, that's the Tether dominance, so it's the stable coin dominance. The higher this is, the worse it is for Bitcoin. The lower it is, the better it is for Bitcoin, and crypto in general. And so we're on the down path, right? We're on a down path. Yeah, we can actually turn around from this middle area. Check it out. Here, bounced off of it, came back up, bounced off of it, came back up. Look here, bounced off of it, came back up. Are we going to bounce off of it and go back up? Very possible to happen. Very possible to happen. Don't just assume that we're just going to go down, right? You guys who use USDT dominance charts, don't just assume we're going to go back down. However, I do think that we're on the right side of this blue line I have marked out, this blue trend line. See, we're under it right now. Whereas whenever we had the turnarounds, we were over it. So what would that suggest to me? That would suggest that we're probably going to continue down, right? So maybe this run still has something in it. I don't know if you can really do TA off of USDT dominance. Some people claim that they can, but I think they're just full of shit, to be honest, because I think the market leads this chart. This chart does not lead the market. So anyone bragging about the USDT dominance chart and how they interpret it is just, to be honest, full of shit, right? Just one of those traders like begging for attention. They just need something to like give them attention, right? This does not lead the market, right? The stock market, interest rates, things actually happening in the world leads the market. This is just a reflection. This is the last thing, the tail end. This is the poop that gets flushed down the toilet after the rest of the market has had its say. Okay, this thing doesn't predict anything. What it can do is give you an indication of where we are because it does have this very clear waveform to it. And as human beings, we like easy to read patterns. And whereas, the Bitcoin chart might be very messy and these other charts might be very messy, this gives you a nice kind of like heartbeat monitor, almost like, just wave to pay attention to. And it kind of shows you the human psychology. But don't forget, it can turn around. Like this is sloppy right here, right? This is up and down and up and down, right? This had an up and down, right? Like this, you can't predict that we're just going down, okay? Don't be hoodwinked by, one of these kind of shystery, traders, that are out there that's trying to make a name for themselves or brag or whatever. This is the tail end. This is the back end of it, okay? It just gives you a clear picture. That's all. Unfortunately, we still need to do the hard work of looking at those other more important, factors. And of course, speaking of, how sloppy things are, it does look like we're just, you know, on a red day. It's not a green day again. Everything's red. We've got some alts just kind of recovering based upon the pump in the last 4 hours. What was that? That was a nice 1% on Bitcoin. So you can see alts kind of firing off. Some of them firing off like 3%. Nothing too crazy. FET, okay, FET. Wow, wow. Nice movement on FET. Nice 7%. Oh, this thing is going for it. Yeah, so again, like on those red days, you might see if there's something that you can buy into. And if it has a bullish structure to it, you can take that risk as long as we're at support. All right, guys. Nothing much to add today. Just wanted to give you an overall status of the market. I guess we can double check with our 5-day tar pit. It's been kind of a while, but something significant did come up, which is that we have turned red. Not only did we turn red, but we tested the middle exactly like I said we would. We tested the middle. And hopefully we're not just getting rejected here, okay? Hopefully this diagonal that we keep like bouncing off of, hopefully it doesn't just indicate, that we're doing one of these things. All right. Look at this. Almost the exact same setup. Came right up to the middle, got rejected off of it at a kind of a diagonal, and then just came plummeting down to the bottom and capitulated over time. So, guys, I told you like this thing would turn red if we didn't get up above this midline, fast enough, and we didn't. And so that's why I've been very, 50-50 on this market. Not bearish, but not bullish because we've just been targeting this midline. And now we've put in the big air bubbles. Are we going to drown, right? Are we going to start drowning? I know you can look at the Gaussian channels on different time frames, and you'll get a different picture on each time frame. But this 5-day is pretty important because there's a lot of similarities to the structure over here. There's a lot of similarity. And we just really want to pay attention to this. Just really want to pay attention to it. If we start coming back down, you don't have that long to get yourself in order. This could even move faster than this area. We don't know. We don't know. So just keep it in mind that one day there could be a huge drop. And if you're not prepared, so be prepared. Just in case, just in case. If we get back above the middle, okay, fine. Okay, fine. Right? Like if we can get into those, if we can get into, 48,000, 50,000 and see if we can hang on to this area. If we have a pullback, okay, whatever. Like we're in the top of the Gaussian channel, but we're still at the bottom of this tar pit. And just be very realistic about it. Okay, we're seeing, we're seeing something struggle, right? Like Credo, right? It for all intents and purposes, this thing should be going, but it's just getting stuck in this mid region. It's taking its time. Keeps getting slapped down. Right? We did come back to my buy-in. What did I tell you? Take profit up here, and then we'll come back to the buy-in down here. And as long as we respect this curve, it's a good buy-in. Probably we're going to test the top of this curve again. right? That's how we've been moving this whole time. And if you wanted to load up, like these are the areas, these green areas, right? And then once we reach this area, you just move your stop loss up because you don't want to be holding this bag, right? You don't want to be holding this bag if the floor does drop out of the market. And so what I say, 275, what are yeah, look, we held it perfectly, right? 274-ish, but we held it perfectly. We're 280 right now. And then again, as long as we're over 290, I think it's perfectly healthy, but you know, you're in that kind of troublesome zone where we don't want to go any lower on this. KDA doing a little bit better, right? Doing a little bit better. Where we haven't come back to my buy-in zone yet, my last resort buy-in zone. We still were in that kind of take profit zone. We didn't hit it, so if you're still holding, like that's cool. Like it's still doing good, right? Still doing good. Just consolidating. But you can see KDA does have a tendency to come back significantly, right? It does have significant pullbacks. So that's why I'm leaving this here. I think unless we like just pop up, you're probably going to get another chance. If not good, because that would be very bullish for KDA, right? The next target would be in this like a $10 area, $9, $10. I don't even know if I would keep this zone up anymore. It's more relevant for this area. Now I would just be thinking about loading up on KDA and taking profits, higher up if possible. And then just moving your stop loss up and up as the price of KDA, rises, then move your stop loss up and up. Credo, I'm not 100% convinced yet. It's not moving as bullishly as KDA. There does seem to be a little bit of market suppression on it, but it's okay. It means that you have a chance to buy it. We're on a pullback day. It's all right. Different coins move at different paces. Right? You saw FET. Trias is one that I've been in. This thing has been crazy. This thing has been crazy. I wanted to buy some more on a pullback, but it didn't give me any. I wanted to buy some more on this pullback, and it just didn't give me the chance. Just completely bypassed, completely bypassed my my buy-in points. So Trias has just been doing great, and yeah, a lot of these coins are doing well, right? That there is the possibility this market's going to continue to pump, even though we're having a bad day, even though ZIL is still having bad days. I hope we can hold this area, like 11 cents, and maybe that would be a good buy-in point. It is breaking down. This wedge means nothing. Just trying to visualize what's going on. It's actually, more of a channel like this. Something like that. But yeah, wow, Trias 10% up. My goodness. Look at this. I'm in this coin, by the way. Wow, 70%. Nice. I kept looking for opportunities to get in some more, and it wouldn't give them to me. Just kept pumping too fast. Wanted to increase my exposure to this coin, but should have gotten in on this pullback. Some of these things are just going for it. Kind of heavy overhead resistance right here. So maybe we'll get a pullback to this area, and maybe that would be a good point to get back into it. But again, there are other coins. There are other coins. All right, guys, that was your alpha for the day. Stay safe and happy trading.